All right, good morning, everyone. It is 8:27 in the morning of December 16th, 2022, and this is my pre-market strategy session. Thanks for tuning in. This morning, if the Qs opened up right now, which of course it's about an hour before the open, the Qs would open up inside the gap. Now, the gap here is this area between 276.01 and 267.76. And the deal is from a technical perspective, all gaps get filled. It's a part of price action repairing the chart. So we had this gap up here from Wednesday, the close of Wednesday the 9th, to the open on Thursday, the 10th of November. And then price went up to a level. Here's another sort of technical level back here of a gap down that did come back and get filled. But this 282 to 280 level. Let me get another one going. To this 280 level has been a level of support and resistance. Let me kind of clean it up so it's a little bit easier to see. So back here, of course, it broke down below that level on the 22nd of September and closed below it. Came back up, tested it here on the 28th of September. Spent 3 days trying to break through it between the 4th of October and the 6th of October, then came back up, retested the level and failed on, the 25th of October. Spent a few more days trying to break through it again between the 28th of October and the 1st of November. Then came down and finally broke through it to the upside here on the 10th of November. That's after a rather significant. It's somewhat, this is a trend line. What I have here, this bottom red line right here is a trend line, and it can act as a rough area of support and resistance. But generally speaking, it's just the trend. It's just the direction of the trend. Here we have a support in this darker red line, or brighter red line, I should say, is the support and resistance line. And so I was anticipating the Qs to come down and fill this gap prior to this sort of late point in time. So the 19th, the week of the 19th, is what is traditionally the week before Christmas is traditionally considered the Christmas rally. So the 19th, 20th, 21st, 22nd, and 23rd. Is supposed to be, traditionally bullish. However, there's only one day left today before what is supposed to be a Christmas rally kicks off, and it looks to me, unless we get another 9-point down day today again, which it's possible. It's certainly possible. That would be another 3% hacked off of the Qs, in basically 2 consecutive days. And actually, let's take a percentage measure here real quick. So the high on Tuesday, the 13th, all the way down to where the top or the bottom of the gap is, would be a 9.77% correction in a matter of 4 days. That's rather drastic. It's possible. It's certainly possible. But I was definitely looking for this gap to get filled before the Christmas rally. And so that really puts the probability of a Christmas rally at low. If this gap isn't filled before the Christmas rally, then so if it's not filled before the Christmas rally, it's just bearish. But then if it's still coming down to test, there in just one day, it usually the price action usually doesn't just sort of drop down and reverse. It does happen on a daily basis, but not in a bear market. in a bull market, you'll see price drop down in reverse, but in a bear market, you'll spend time down here at the at support areas before it starts going up. So the Christmas rally is definitely in question here, and I have a low degree of confidence in seeing a bullish week prior to Christmas, and coming close to the top end of this resistance channel here, and then failing usually puts downside on the table, especially in a bear market. The trend is your friend, and the trend is definitely bearish. So it ought to be, a pretty exciting day on the market, I imagine. Usually anything can happen. There's no indicator. There are very, very few, extremely high degree of confidence trades you'll find. Only 3 or 4 days out of the year is there a time when you can have an extremely high degree of confidence in either direction, bearish or bullish. And today is definitely not one of those days. In fact, up until, it'll probably be kind of really choppy and hard to navigate for like the next 6 weeks, really. So here we are, sort of in the middle of the range. We've got this gap to be filled below. The market tried to rally and pop up over this resistance line, and it didn't even make it to the resistance line. To me, that's more bearish. The high probability trade will be in the bearish direction, in the down direction, and perhaps if we fill this thing all in one day, that would be really ugly. Maybe it'll just set it. Well, the market is just setting up for Monday to come down, hit the bottom, and then take off for the rest of the week. But it's really hard to say. So just sort of on a short-term basis, let's see what's going on here in the morning. So we're getting close to oversold on the 1 minute and 10 minute on the Qs, and the middle of the road on the VIX as far as being overbought. Interesting thing happening here on the VIX. I have this. You're not really supposed to chart the VIX, because it's just not reliable, and it really isn't. But here is a general sort of trend line for the VIX. And it was neat to see it break down below that. Would have liked to have seen it break down, kind of pop back up again, and then even go further down. But it's not doing that for us right now. Technically speaking, the VIX did make very recently a new lower low. So there could be some light at the end of the tunnel. It's hard to say. It's really hard to say. This could just be the next bottom before a big run up in the VIX too. So things can remain bullish. Here's the 10-year, 2-year spread, and things can remain bullish as the yield curve inverts and goes further and further negative. The markets, if you look back at the markets. I'll use the VIX here actually and go to the monthly. Oh, I'm sorry, not the VIX. Was it the Qs? We'll go back to the Qs. Oh no, the 10-year, 2-year. Here we go. Sheesh, getting lost in my own charts. So here's the crash before, I think it was 90. Yeah, and here's the .com bubble before the crash, and here's 2007 before the crash. And if you go back and you look at the data on the charts, you'll see that leading right up until the last month or two before the yield curve normalizing again, that's when the top hit. So, this yield curve lasted for about 12 months, and this yield curve inversion lasted for about 18 months, 2001, 2007. And the equity markets remained bullish all the way up until about a month or two before the big crash happened, right before the yield curve started to normalize again. And here we are, we're going into 6 months. We're about halfway, about 5.5 months into a yield curve inversion here that traditionally lasts, with our previous examples here, anywhere between 12 months and 18 months. So yet, short term, long term, the next 6 to 12 months on the market, I think, generally speaking, could be bullish until we see, the final shoe drop and whatever is going to kick off this crazy, whatever kind of financial crisis we're staring into. The things can stay bullish. So it's a tough call. I mean, it's a really tough call. Trade the chart that's in front of you. So going into oversold in the pre-market on the Qs, and then going into overbought in the pre-market, here on the VIX. Once all four of those line up, there's probably a pretty good trade to be made to the long side, but I will be waiting for a setup to the short side because that's the direction of the trend. So I'm waiting for the Qs on both the 1 minute and 10 minute to go into overbought and start coming out of overbought at the same time the VIX is coming out of overbought at the same time the VIX is coming out of oversold. So there's some work here for the charts to do before I'll feel comfortable making a trade. In any case, if I do get into a short trade here, then I am looking for a tag of 267.76 sooner rather than later, relatively, within a week, for 5 days of trading, maybe even 6 days, including today, which kind of takes the Christmas rally off the table if that's going to happen over the course of a week. So, yay, right? Merry Christmas. It's the way it goes sometimes. Not every we don't get a rally every Christmas, so it's the way it is. We'll see how things turn out. And kind of looking around the horn, Bitcoin here did a pretty interesting thing. This is a neckline again that I have. I'm using it as a trend line, and generally speaking, Bitcoin took roughly 2 years to complete this formation. Here it is. I'd say actually right here is where it's complete. So from December of 20 to the middle of January, what is that, of 2022. So that's 21, about 18 months. You can expect another 18 months of downward movement on Bitcoin. And it's following its trend line. It popped up above it for a short amount of time. Now it's coming back and it's back testing, this support and resistance line. Actually, it's not a support and resistance line; it's a trend line. But you can see here it does somewhat follow this trend line here. Generally speaking, it'll go up and below, quite a bit. I imagine that we're probably going to see the next leg, this sort of drift down. What I'm seeing on Bitcoin is 13,000 by roughly February. Roughly mid-February of next year, mid to late February of next year. Bitcoin ought to be down, in the 13,000 range. Gold. So gold is acting like it's putting in a bottom here. I don't think so. This is looking really bearish also. This is a double top here. Not a picture perfect distribution pattern, but a distribution pattern nonetheless. So there's a lot of selling into this strength up here. And, once the worm turns, meaning that once the yield curve starts going positive again, all correlations go to -1, you could say, or 1 really. So once the equity markets start tumbling down and crashing, kind of everything crashes with it. So everything gets liquidated. When people are looking for cash to cover whatever kind of leveraged positions they have or whatever it is, everything gets sold. So Long term, of course, long term meaning 20 to 50 years. I'm bullish gold, no doubt about it. Short term, less than a year, I'm bearish. And that's pretty much true with everything, really. It's going to take some time for all of these economic woes to unravel and everybody to get set back on track for prosperity. All right, everybody, good luck out there. Keep your risks tight. Click like, share, subscribe, leave a message, tap the bell, and I will see you at Monday morning's strategy session. Have a great weekend, everyone. I am out.